Hey traders, in this video I want to go over the H-cell pattern here. It's a very popular pattern when a stock is going to break support and have a move to the downside. You don't want to buy on the H-cell because you will get burned. So let's look at it. Here I'm looking at a chart of Lowe's, right? The very popular name when you're going to buy a house or fix up your houses, like many folks have done over the past couple years. Beautiful chart to the upside, had a phenomenal run from 100 to about 180 here, right? And we could draw all the lines on it. We won all the moving average, Ichimoku cloud, RSI, bull crap. Who gives a crap? All I care about is the stock going higher or lower. So I want you to pull out. You could use a pen, whatever piece of paper, and I want you to draw an H. Okay, a lowercase h, right? And let's make it actually a little bit bigger, so an H, right? So we have our H. So remember what that looks like, that H. Now I want you to go to a chart, and I'm looking at the daily chart. You can actually use this strategy from 1 minute, 5 minute, 15 minute, 30 minute, all the way up to weekly charts. I'm looking at it on the daily. And the first H-cell pattern I see, because sometimes stocks don't go straight down, I mean, unless it's like an earnings or a big event. So sometimes stocks will go sideways and H. So we're looking at a kind of a lopsided H. So the first H-cell pattern was right here in Lowe's. So the H, move lower. You see that? So our H isn't directly straight, right? Our first, so we'll use number 1. Second H-cell pattern, and this one was a textbook one, big red candle, move higher, then we take out the prior low. So we have our H. Now what is setting up here? Again in Lowe's, H. And where would we break down? This one's a little bit wider. Below the previous low or that support. You see how when we break support, we have a downside flush on volume. This here is volume. So we'll have a downside flush here on volume, and the shares will move lower. So the whole point of H-cell pattern is, it's a bearish pattern, but the whole point of it is when we see the break, let's get the right pointer here. Here we are. When we see the break of this, the low, the stock is going to move lower, usually on elevated volume, because those people who have bought up in here thinking we're going to get a V bounce are going to be wrong, and they're going to get stopped out their positions here. So a V bounce, very bullish. But when we take out that prior low, very bearish. So we kind of slow and break them. Slow and break them. That is our H-cell pattern. Think of that lowercase h next time you're looking at a chart. And remember, if you do see that, run, because the stock could have more downside. Subscribe, like, leave a comment, turn on those notifications. Follow me on Instagram and Twitter at Ippolito, and have a great trading day.